For the first time in nearly a week, the institutional money spigot into Bitcoin just turned off. US spot Bitcoin ETF snapped a 5-day inflow streak on Thursday, as Bitcoin briefly dipped below $80,000 for the first time in several trading sessions. Analysts at several major trading desks say profit-taking has increased sharply among both retail and institutional traders after the recent rally toward $85,000. The Fear and Greed Index sits at 38, still in fear territory but recovering from 26 last week, suggesting market sentiment is slowly stabilizing after the early month volatility. Bitcoin is now trading around $80,062, essentially flat over 24 hours but down noticeably from the weekly highs set just days ago. The dip triggered over $10 million in liquidations across derivatives markets, with long positions taking the majority of the losses as leveraged bets were unwound. Traders are now watching closely whether BTC can reclaim the 80,000 level in the coming sessions or test lower support zones before any meaningful recovery takes hold. A Bitcoin miner just secured one of the largest AI infrastructure deals in history, backed by none other than the world's most valuable chipmaker. IREN, formerly known as Iris Energy, announced a $3.4 billion AI expansion backed by Nvidia, which also took warrants that may eventually convert into a $2.1 billion stake in the company. The deal involves building massive AI data centers alongside IREN's existing Bitcoin mining facilities across Texas and Canada, leveraging already secured energy contracts. Bernstein analysts immediately raised their price target to $100 per share, citing the strategic pivot from pure cryptocurrency mining to high-margin AI infrastructure hosting. IREN's stock surged double digits on the news as investors priced in the Nvidia backing and the long-term revenue potential from artificial intelligence workloads. The move highlights a broader and accelerating trend of Bitcoin miners repurposing their energy infrastructure and real estate for artificial intelligence compute clusters. Other publicly traded miners are watching closely to see if this AI pivot becomes the new standard playbook for the entire industry. One of the largest crypto exchanges in the world went completely dark for hours on Thursday, and a major cloud computing failure was to blame. Coinbase suffered an extended outage after Amazon Web Services failures across multiple availability zones simultaneously disrupted trading, deposits, and transfers on the platform. Users across the United States and Europe reported being unable to access their accounts, execute trades, or withdraw funds during the peak afternoon trading hours. Coinbase confirmed publicly that the issue stemmed entirely from AWS infrastructure problems and not from any security breach or direct attack on its own systems. The outage raised fresh and serious questions about centralization risks in crypto infrastructure, as a single cloud provider failure was enough to take down an exchange serving millions of customers. Competitors including Kraken and Binance remained fully operational during the incident, highlighting differences in platform architecture and back-end redundancy strategies. Coinbase says it is now working directly with Amazon to prevent similar disruptions and has reassured users that all funds held on the platform remain safe and secure throughout the incident.